It is time to check in on the business report. Ticky Fullerton joining us this afternoon. Ticky, I mentioned at the start of the program there, terrible day on the markets. It was down 2.5%. Now it's closed. Where did it finish?
Closed 2.4%. Absolute shocker. Yes, David. 6,478 finished up. So literally over the last couple of days, $80 to $90 billion knocked off the ASX. And as you were saying earlier, very much the market now in shock as a result of the sort of hiking up of the trade war between the US and China, those additional tariffs, and then China responding with the yuan, and then once again America responding, accusing China of currency manipulation. Now the yuan has actually stabilized a little bit. It weakened through 7 yuan to the dollar, but it's stabilised a little bit there. But it does mean that a lot of sectors in our market have been hit quite badly.
So tech stocks, health sector stocks amongst them. Why? Is this all because of the trade dispute?
Well, look, partly it's the froth that's been on the market. But this time last week when we were talking, we had record highs both here and on Wall Street. So tech stocks very much coming off there. Health stocks, yes. Also energy stocks because of the oil price being hit with this trade war. But I think as well, David, the market is waking up a little bit to the geopolitics of the whole thing. And Hong Kong, people haven't been talking about. If you look at the Hang Seng, that is starting to come off now. There's been some almost denial about Hong Kong. Hong Kong is a financial hub. And from China's point of view, again, it hasn't really been mentioned that Taiwan, last week, China banned visits to Taiwan from China. There's a Taiwanese election coming in January. The Chinese do not want the Taiwanese, I don't think, to be looking at Hong Kong with all these pro-democracy protests, because that's playing into, I think, quite an unstable scenario building. So I think as people get more and more focused on Hong Kong, it's the great place for China to receive US dollars. It's the great conduit in there because of the great capitalist economy that it is, but it is slowly sliding, as we're seeing, to more and more of a China grip. And I think you will see people focus on it and become more concerned there. Never mind Brexit and all the other issues around the world.
No, indeed, just another worry. Look, the Reserve Bank, not surprisingly, kept interest rates where they are today, but very much keeping the door open to another cut or two. What did you read into the statement from the Reserve Bank Governor, Ticky? Well,
steady as she goes. It'll be interesting to see the state of monetary policy happening on Friday. But I think steady as she goes, as you mentioned earlier, look, that he sees, Phil Lowe sees rates low for a while yet. It's interesting to look at the yield on our 10-year is now at 1%. Which is very depressing in terms of the outlook, the economic outlook, I think. So I think, again, Philip Lowe's comments remain to the negative, I think, in terms of trying to get the economy right to create that increase in wages, but it's awfully reluctant, isn't it? And at the moment, we see cash rates falling. Some people are expecting it to fall a couple of times in the next few months. We'll wait and see.